Hello and welcome to another Monday report by Bordier. Donald Trump's announcement last week on tariffs much higher than expected came as a bombshell. Who are the winners in a trade war? The answer is no one. That's what the OECD reminds us. Here you can see the estimated effect in year 3 on the GDP of the various zones of reciprocal tariffs of 10% between the US and the target countries. Everyone loses. And these figures need to be multiplied by a factor around 3. And the USA itself has much more to lose than the rest of the world on average. These measures will be inflationary in the short term, but above all, recessionary. This is exactly what the interest rate, the credit, and the equity market started to predict last week. And Friday's announcement on Chinese retaliation on its imports from the USA has accelerated things. Sovereign interest rates fell sharply, allowing sovereign bonds to post a positive performance. This was also the case for high-quality corporate bonds, despite the widening of their spreads, meaning their risk premium in relation to government bonds. But high-yield bonds and equities have suffered badly. Developed equities are down 8 to 9%, and European markets are down a further 5 to 6% this morning. The fact that gold has, against this backdrop, fallen slightly is worth watching. If it continues to fall, it will signal the sale of a liquid asset to hedge the liquidity risks on leveraged investment strategies, which is not a good news. Our view is that as long as the US administration shows no sign of opening up, market will increase the probability of a global recession and continue to incorporate it into prices, which is not yet the case, despite the brutality of the movements observed last week. That's all for today. Good luck to you all investors, and thank you for listening and see you next week. Bye-bye.